a critical piece of our whole model
Mhm.
is to recognize that the intellectual property can have a life independently of the startup, but the two really depend on each other, especially in early days, because to get that technology to real commercial grade, you need the startup.
Hey everyone, this is Prashant and I'll be your host for the VC 10X podcast. And today we have David and Michelle with us. David and Michelle are the co-founders of Aventurine Capital Group, where they are focusing on inventors, researchers, and entrepreneurs with strong and impactful foundational IP-led companies. Their IP commercialization program and studio provides unparalleled support in realizing the potential of intellectual property through IP strategy, IP asset management, and supporting go-to-market services. In this episode, we talk about what is Aventurine and how they are different from venture capital firms, most exciting sectors when it comes to IP investing, where will the next light bulb moment happen, and a message for future innovators. So without wasting any time, let's dive straight in. Hey, Michelle and David, so good to have you on the VC 10X podcast. How are you doing?
Doing great.
Very well, thanks.
Pleasure hosting you, and I'm pretty excited about what Aventurine is doing. It's somewhat different from what typical venture capital firms do. So I'm pretty excited for this episode. But to start things off, what's the story behind Aventurine and how you started investing via Aventurine?
Well, so I'm a lifelong tech entrepreneur, and a couple of my companies had very rich intellectual property portfolios. And one of them, Intertrust Technologies, back in the 90s, ended up being a very successful business with a multi-billion-dollar IPO. But in the early days, when we were trying to get venture capital, we kept running into obstacles, and they just didn't seem to get it. And I chalked that up to just the times we were living in. And then a couple companies later, I did it again, another deep tech company. And that business, now I'm a cashed out entrepreneur, can walk in the front door in any VC in Sand Hill Road. And I still couldn't get them interested in our deal. And so that really triggered something in me. I said, the next company I'm going to do, I want to be the investor that I wish I had met when I was running those kinds of companies. And that was really the origin story for Aventurine.
Yeah, that's pretty exciting. Uh, 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 like talking about what's actually different about Aventurine, from what I gather, is that you're investing in inventors. Basically, these are not the typical founders or businessmen, but actually the inventors, and then helping them build their company. Is that correct?
Yes, so we are investing in the inventors and the IP, which is a slight twist on typical venture.
Right. Yeah, that's a very interesting model. So are you also kind of like an incubator that you're taking once you make the investment, you're also like very hands on and help them build the company as well from there on?
Yes, so we have what we call our investment studio because we invest in both the IP
Right.
and the venture itself.
Hmm.
And in the investment studio, we nurture, develop, grow the IP,
Right.
as well as helping the company hire, do all the things you need to do to get ready for traditional VC funding.
Right. Pretty exciting. So how does this model work? I believe the model of a typical venture studio is different from a VC fund model, wherein because the kind of equity you take in the company is different in a venture studio model, wherein you take in a lot more equity because you are like basically holding their hands all the way. But in a venture fund model, you give them the capital, you give them the support, but they are the ones who build the company. So, which one is Aventurine more of in between these two?
Well, we do a little bit of both
Okay.
because one of the things that we really like about the venture studio model, so we adopted a portion of that, is the ability to de-risk these deals, and more importantly, it gives you access to a different category of technology. When you mentioned it earlier, when what you have is the inventor, you have the scientist and the engineer, you don't have the business team. It creates a context for you to be able to put that team together. So that's very important. On the other hand, the way we're approaching investment is we consider the costs and the work that we do in the investment studio part of the investment. And so when we set this up, we do not want to create a cap table, a capital structure for the venture that is going to make it more difficult for either the founders and the entrepreneurs to succeed, or for subsequent investors to be able to get the kind of placements that they need. So we do not dilute as heavily as traditional models, and the structure we've set up makes it possible for us to do that.
Right, right. Very interesting. Now, talking about what exactly do you look for in the companies that you invest in, and to also give our listeners a view, what are the ideal kind of companies that should come and pitch you?
Right. So we are looking for early stage companies who are innovating in deep tech. So we have 6 practice groups, and they are AI, life sciences, robotics, energy, platforms and systems, and quantum. And what we're looking for are basically solutions to problems that the market has already recognized in those areas that will be relevant to multiple markets. Our play is really focused on investing in IP and technology that is relevant to multiple markets. The original startup takes one, and then we focus on developing the IP and core technology for the other markets. So the full commercialization of IP and technology is our goal.
Right, great. And how early do you come in this journey? Is it like once you have the IP, you can come and pitch, or is it like you need some sort of traction to be able to invest?
Traction is not required. Once you have the IP is complete. We know that there's a solution to the problem,
Right.
and it has the potential for commercialization. That's when they can come
Right.
talk to us.
Great. Can we talk about some of your exciting portfolio companies?
Sure. We have 3 warehouse deals that we like a lot. So we are a fund in formation. We'll bring our fund effective in the first half of next year. But right now, we've raised some capital to be able to go in and invest in a handful of deals. So we have one that we really like in AI. It's a form of emotional intelligence, and these scientists have figured out how people make decisions, how the brain operates when it's trying to make a decision. And then in addition to that, they figured out a way to determine what an individual's strategy is for being able to make that decision. So this is very helpful in everything from sales enablement to persuading seniors to be able to take their medications.
Right. That's very interesting. And when you have such deep tech models, so once you have the IP in front of you, do you also go through this thought process that, okay, how can we make this business relevant, or make this a scalable business, or convert this into a model wherein this can be a big business as well? Because that's a great invention on one hand, but then on the other, we need to have people who would be willing to pay for that thing. So how do you go through that process?
Absolutely. So prior to investing or focusing on a particular technology, that is part of it. So we need the go-to-market that is going to harden the IP, and it's great marketing for the IP in other markets as well, because other businesses can look and see that the IP is relevant, helpful, and the technology can advance their own businesses. So absolutely, the go-to-market, being able to commercialize the IP and technology is critically important. The interesting thing is that where we have IP and technology that's relevant to multiple markets, where we're focused on developing them, we can spin up new startups. We have a lot of flexibility to actually ensure commercialization in the other markets outside of the original startup.
Right.
And that's really a critical piece of our whole model, is to recognize that the intellectual property can have a life independently of the startup, but the two really depend on each other, especially in early days, because to get that technology to real commercial grade, you need the startup, in addition to the marketing benefits that Michele was highlighting.
Right, absolutely. And talking about the kind of support you give to these companies that you invest in, so on what all aspects do you help these companies to try to build a good business out of it?
So in the studio, we have someone who manages the studio and offers typical incubator, accelerator type support and services outside of the IP. So it's everything from coaching to HR, the typical out of the box things that every entrepreneur needs. And particularly for some of our founders, they may be scientist types, right? This is new to them. This may be their first venture, as David said. So it may require some recruiting and bringing in a business team as well, and making sure that the startup is set up for success. Anything to add to that?
Yeah, I'd say, I mean, one of the things that happens with companies that are really based on truly innovative core technology is that they'll run into a common set of challenges that are actually unique to them and rarely encountered by other businesses. I'll give you an example of that is the new category marketing problem. Almost always when you have a truly foundational system, it's going to change the nature of the market. It's going to change the way that market operates. And that takes a special kind of skill for marketing. And it rarely happens in most startups, and it happens almost every time when you're talking about these deep tech models. And there's other elements of product development is similarly different from the way it's classically done. You can't just go to market as quickly as you would like. You have to do much more experimentation in order to determine where the real points of traction are going to be found. And of course, if you've changed the marketing and you've changed the product, of course, that changes your operations and changes your finance. And so we're able to provide these kinds of companies, which are very unusual from most people's point of view, with a set of kind of consistent services and models that we've developed over time that are really designed, really fit for purpose in those categories.
Right. Yeah, that's amazing. And I like to see these models where an actual real invention is happening, because I keep seeing, okay, I'm a fintech investor, I'm a commerce investor, and then and all these sectors are there. Like, these are typical sectors. There are so many SaaS companies, SaaS businesses, and there are VCs willing to fund those businesses. All that's great. But then where's the real innovation happening, right? And I see you guys doing it. So kudos to that. And one more thing is, like, since we're talking about the venture capital space, so this space especially is about maximizing returns, because you have your own LPs and you want to give them returns on the capital they invest with you. So do you think this is a good space to target when we talk about venture capital scale returns?
Yes. I mean, one of the things that really struck me as I began doing the research a few years back into this business is that these IP-rich companies can actually return better than your traditional venture. The key element is being able to wait, being able to have the patience to allow the intellectual property to mature in the market. One of the things we learned in the intertrust business that I mentioned earlier was that if you look over time, by the time you get to year 5 or year 7, the intellectual property is barely getting going. And that's the moment in time in which you're really looking for an exit from VC. However, if you let it mature over a period of time, you look at years 15, 16, year 20 and beyond, that's really where you start to get the really high level of return. So you need to, in order to capture that, you need to build a return envelope, build a financial product with a return envelope that captures all of those. But if you do, you can see IRRs well into the 40s.
Right. Got it. And, like, since you're in this exciting space where you're dealing with innovations day in and day out, what exact areas do you think is the next big innovation coming from? What are the exciting sectors within this space that you're operating in, where you are seeing some exciting innovations coming up?
I would say our sectors. Go ahead, David.
Well, we did pick our sectors with that in mind, but I think I'm very intrigued by some of the things we're seeing in energy right now. I think that climate has really driven some very important investments, but also just yesterday we heard about breaking through the threshold of more energy out of a fusion reaction than they put into creating the reaction. Now, I know that's a ways away from commercialization, but I think what that really highlights for me is that now the investments we're seeing, the public market or the public investments we're making in technologies is really influencing the market in a basic way. So now the U.S. is investing more in R&D in this year than they ever have before, any time in history. And so I think we'll see more of that, and particularly in the other deep tech areas like quantum and some of the core life science areas. I think you see again where a place where a lot of the core research is being funded by the public, and then where a company like ours gets involved, an investor like us, is in taking that well-developed research and turning it into really valuable commercial property. So I think As we look in those areas where there's heavy investment by government, there's a ton of opportunity for investors. It's in effect, it's a lot of non-dilutive investment in the basic technology.
Right, absolutely. And talking about once these come to you, these IPs come to you for investment purposes, uh, what's the process you go through for making the decision on whether to invest or not? Is it based on, is this IP relevant or not? That's one aspect, and then another one can be that, is this IP, can this be something that can be a potential business as well and can make a lot of money as well, right? And also, do you also consider the fact that, can this person who is pitching me right now be the right person to run this business or not?
So why don't you deal with the person, and then I'll deal with
Okay.
our process. It's a little bit different than
Sure.
typical
Yeah.
investments.
Right. I mean, exactly. In a typical VC firm, the first thing you're looking for is you're looking across the table to see, do I see an exit-worthy CEO across the table? We do not. We know very well that the kinds of scientists and engineers that develop the IP that we're talking about don't make good CEOs. I mean, if it happens, that's a wonderful coincidence. But our model is premised on the fact that we're going to be building those business teams, and we're going to be putting those elements together. Now, we want those, need those inventors and scientists and engineers involved in the process, but they'll typically be a chief science officer, or maybe if they're more operational, a chief technology officer rather than a CEO.
And then on the diligence piece, it's different. What we do is we do essentially a structured service, something that, say, a McKinsey might do for a company. And what we're looking at is it's a multi-day thing, very creative, working with the team to really explore the IP, the full breadth of it, as well as the markets it's relevant to, and then figuring out the alignment between the IP and the business and other potential markets. It's a really fun exercise to go through, and at the end we have a pretty good idea of what the potential is for commercialization of the IP and where the technology is likely to go.
Right.
It's a creative process, and that's necessary with the kind of people we work with. They tend to be highly technical but very creative, and so creating the right context, as Michele just described, is absolutely essential to really getting to the bottom of what they've got.
Right. Exactly. Totally agree with that. And do you have any advice for the future generation, that how do they get this creative mindset and like bring up these innovations? And now that it is also venture backable kind of a thing, that you make the invention, we're going to back you eventually and stay for you, right? So what would be a word for the future innovators?
Well, what we're looking for, as we described earlier, is core technology that's applicable to multiple markets. So we're looking for people who have solved a fundamental problem. That's where we begin. But when they emerge from our studio environment, what they're looking to have is a venture fundable business. And that's almost the opposite, because first you focus, then you focus again, and then focus some more. And really concentrate on locating that market and building your customer base and having a large mass of really terrifically engaged and happy customers. So the transition to more of a classic venture strategy happens in the course of the studio development. And I'll give you one piece of advice that I wish I had heard years ago when it comes to the venture side, which is that venture capitalists don't really care about your business. They care about their business. What they're really interested in is, when they're going to write you a check, when are you going to write it? When are they going to get a check back, and how big is it going to be? So when you're building those pitches, you may have heard it before, but concentrate on what that exit looks like. Who are you going to sell to? What are the comparable prices in similar kinds of transactions? And what does the time frame look like? What goals are you going to need to achieve in order to be able to have an exitable business?
Right, absolutely. And have you identified any specific communities where there is like innovation is being fostered and encouraged in those communities, and then you're partnering with those communities, and then if an exciting innovation comes up, then you go and fund that one? Have those partnerships in place?
So one of the things that we're actually doing is, there are about 800 research universities in the country, and the ones on the coast get a lot of attention. So we are really focused on universities in the middle of the country that are innovating in our practice areas and trying to build relationships with them, because we may be the only game in town, right? And if we develop the right relationships with them, and hopefully we can create an opportunity for commercialization that they would not otherwise have. One thing we've seen in building this business is a lot of really good research falls on the floor, and so we want to make sure that doesn't happen.
Right, absolutely. Yeah, that's a great approach. And my last main question for you would be, before we move on to the rapid fire round, is where do you think the next light bulb moment or the next telephone moment is going to happen? What is that thing going to be, if you take kind of a wild guess? Or in which space will that be?
Well, for me, I think the next big breakthrough is likely to be in quantum computing. I think that we're going to see some really fundamental changes that happen in technology, but also throughout society as quantum computing really reaches its flower. Because the same basic technologies can be used to solve problems in life sciences, cures for cancer, even cures for more exotic diseases, as well as dramatically improve communication and create new forms of artificial intelligence.
Right. It'll be interesting to see that. Yeah. And now moving to our rapid fire round, wherein I'll ask you five quick questions about the fund, and you have to give 5 quick answers. So who will be taking that? Michele or David?
We're going to trade off, so it depends on the question.
Sure. That works. All right. So the first one is about the sectors and regions you invest in.
So as we said, our sectors, our regions are research universities in the middle of the country. Our thesis areas are quantum, AI, life sciences, platforms and systems. I always forget robotics and energy.
Got it. Great. And what's the typical check size?
So we typically incubate companies over a period of 1 to 3 years, and we would expect $1.5 million to $2 million over that period of time, divided between the intellectual property and the operating company. The operating company will receive the lion's share.
Great. And this is at the pre-seed stage, the very initial stage, right?
That's right.
Yes.
Yeah.
Great. And where can founders or these innovators pitch you?
They can send us an email, and we will get them through our process.
Great. I'll put your email in the show notes. And the last one is, where can our listeners follow you or your blog post, if you have one?
Primarily on LinkedIn.
Right.
We have an active presence there.
Great. So I'll make sure to put all those links in the show notes below. It was great interacting with you both, and I love the fact that you're investing in real innovators and where the real inventions are going to happen. And I love that the way you're doing it, taking full care of the people who are actually inventing by giving them a proper environment wherein they can actually build businesses that can flourish. Thank you for doing what you do, and happy investing.
Thank you.
Thanks.
Pleasure hosting.